goings. Cory and I, we actually have a Wealth Wednesdays show where Cory is the host. He's allowed me to come on his platform. And so Cory is going to be joining us today for Tax Talk Live. And so, Cory, I just want to introduce you to the audience, to the community, and just welcome you to the show. And definitely glad to have you, brother. And it's always a pleasure to see you.
And I'm honored to be here again. As always, brother, we share common interests and common goals, and we always striving to do great things in life and let people grow around us, man. So again, I'm honored to be here under my government name alias. But I appreciate you, Brieon, man. Allow me to be on your platform, man. Let the text talks begin, my brother.
Let it begin, and we're going to go ahead and start with tax talk. And so let us go ahead and jump right on into it. And Cory, I know you have a lot of insight. Quite naturally, your background in maneuvering taxes, having worked outside of the U.S. So I know you have a lot of insights, and I just want to go ahead and give you that invitation to jump in. Kind of last week, just recapping with everybody real quick. We're still talking about understanding forms, and so last week we dived pretty deep into the Schedule C form, and so we're going to continue this journey of understanding forms. So if you wasn't with us last week, if you weren't able to catch us when we talked about the Schedule C, then we want to make sure that you're able to catch up on those videos. So go back and take a look at our YouTube and take a look at our live, and you'll be able to catch up on those previous episodes. So jumping into Form 8829, which is what we'll be looking at today. This form is so important. We look at it and we understand that it's used to figure the allowable expenses for business use of your home in conjunction with Schedule C, which is also a part of your 1040. And also you'll see that any carryovers to the next year, so any amounts that you have that you're not able to actually utilize, then you're actually able to carry those over to the next filing year. So we're going to go ahead and get into it and talk about some of the, business expenses that you can utilize your home for. And we see here on this Form 8829, we see that the confidential information, that individual's name, that individual's social security number has been, blacked out so that we can keep them confidential. So let's start out. And I just want to ask you this, Cory, real quick. When it comes to, home use, when it comes to those deductions like your cell phone, your internet, I know you're taking advantage of, so many different deductions, but just do any insights you have that you want to share before we actually jump into part one of utilizing this Form 8829. Anything you want to share real quick with everyone out there?
Hey, well, I'll be humbly. I'm firstly humbled to say that when it comes to these types of extensive amounts of forms and stuff like that, when it comes to taxes, I am still a student of this art form that we call benefits. So I have to humbly say, brother, that I am actually a student, and I'm still acquiring information and learning. As far as business aspects and like the thing, the platform that I built, I'm coming at you with honest opinions and then as we go through it, I will have these questions and I will also input as we go about going through the form so that I don't want to slow down the process of the viewers. So that's just, let's go ahead and get into it, brother, and go ahead and get into your information, and I will just tap in as needed.
Absolutely. And definitely appreciate that. So any questions, any comments, anything you want to throw in there, just go ahead and throw in there. So when we look at the first part of Form 8829, then we see that, part one talks about how much space you're actually utilizing in your home. So we look at line number two, we see where it talks about the total area of the home. And so I want to make sure that, we all understand line number two is going to be your total square footage area of your home that you're utilizing. And so when we look at line number two, that's the total area. And then we'll actually come back and we'll see on line number one, 813 square feet of that total area was actually utilized for the business use of the home. So we want to make sure that we understand very clearly that based on the total square footage, which is what you'll see here by the green arrows, you'll see 813 out of 3,250. That's approximately 25% of the home's total square footage, which was used for business purposes. So that's what you see there figured in part number one. So we'll go ahead and jump on down also to part number two, where there's some very, very important numbers and information that we have to be able to figure in part number two. So first and foremost, we know that Form 8829, it's a part of the Schedule C. It goes hand in hand with the Schedule C. And so you'll see there on line number 8, those are the expenses that are figured from line number 29 within the Schedule C. So you'll see a negative 45,107 that's actually being rolled over from the Schedule C form in line number 8. But what's important here, and I want you all to make sure you don't miss it, is that you start to focus from line number 18, whereas you see insurance, you see rents, you see repairs and maintenance, you see utilities, and you see other expenses going down to line number 22. So from line number 18 throughout line number 22, that's where you're going to see those key expenses that are being shown there. So starting out with utilities, you're going to see utilities for 6,321. That's actually on line number 21. So very important. This is your electricity. This is also, maybe your water utilities. This is also some of your other household utilities you may have that you want to have figured up into this number on line number 21. And so you want to ensure that you account for all utilities. And then you want to make sure on line number 23, all of your utilities from line 16, all of your expenses from line 16 through 22 are actually added up. And you'll see here on line number 23, there's only one item, which is the utilities. So that's your total. Now, very important you understand how to figure this item up and that you understand how to go back and look at line number 3. So when you look at line number 23, you also look at line number 3, and you take 25%, which is in line number 3, of what's in line number 23. And that gives you your amount in line number 24. And so actually, if you're following the form, it says multiply line number 23 by line number 7. So if you see on the form here, line 7 and line number 3 are the same. So you're going to multiply those by 25%, which gives you your deduction amount of 1582 in line number 26. So making sure you understand you won't be able to deduct all of your home utilities, all of those expenses. You'll only be able to deduct the amount in correlation with the percentage of your home square footage that's used for business. So very important you understand that. And so we're just going to go ahead and get down to the last section. We're going to skip over section number 3, part 3. depreciation of your home, as this actual tax return from 2021 doesn't have anything in part number 3. So we're going to go down to part number 4. And this is where this individual has maxed out those deductions. And so you see this down in the carryover of unallowed expenses section. So these carry over actually to year 2022. So all of this 1,582 dollars of expenses are actually being carried over to 2022. So very important, you understand that you don't leave any money on the table. Any expenses you have, either they'll be taken in the current year, or either they will be taken in the future filing years. So you won't be losing any expenses at all.
Hey, Brieon, I got a quick question.
Yes, go ahead.
Not to interrupt you. Question is, can you link 8829 to a Schedule K1, Schedule KF, or Schedule E?
Yeah, so basically, just say for a Schedule K, I'll say your Schedule K is going to be for a partnership. So if you have partnership interest, or you have interest in other businesses, then that Schedule K is basically going to be reporting all of the expenses from that business. Your home office is typically going to be linked to your individual business or your individual entity. Or in some cases, for most folks, it's going to be a sole proprietor, or either it's going to be a single member LLC that you may have it as an individual, or you may also have as a husband and wife. So this form ultimately, yes, it'll be linked to all the other schedules in your tax return. Very good question.
Interesting.
So that pretty much covers, because we want to keep it, very concise, very straight to the point when it comes to these forms. So that pretty much covers Form 8829. I know there's a number of questions, and I know we kind of cut short last week uh, because of the material was quite detailed, and so we make sure that when it comes to the questions, we want to answer all of your questions. So we've allotted additional time today to start answering questions early. So I'm just going to get through the last couple of points here, and then we're going to jump right into the question and answer session. So, as you all know, you all that's been following us week in and week out, many of you all have seen this website. But for those of you who are new, this is the IRS's website, official website of the U.S. government. And so if you go to irs.gov/forms-instructions, then you're able to go here and utilize this search box. And this is exactly what I use. I use this to search for any questions, any forms, whether that's for the current year of 2023, any forms for previous years. They have an extensive database of forms for prior years. But for those of you who all are looking for a reputable site that can answer your questions and keep you in line with the IRS, keep you in legal standings with the IRS, then you want to go here to their official site so that you can get the right information, and you'll be able to have your tax filing and done in a legal manner to keep you out of any sort of issues with the IRS. So let's go ahead and jump on into the questions. I know there's a number of questions that we've received, and so we wanted to, give enough time to be able to answer everyone's questions. So let's go ahead and start. I'll start with the first question that we've received so far. Let me get everything pulled up on the screen here. So there's a question that was received, and the question is saying, what are the basic steps? What are the basic steps that I should take to start planning for my personal income taxes? And so this is a very good question. And the first step you should take when it comes to tax planning is I typically recommend doing a 3-year review. So go and gather, first and foremost, the last three W-2s. Go and gather the last three tax returns, and also go and gather any additional records that you may have with those tax returns, any ledgers, any bookkeeping, any QuickBook records, any bank account. Those are the additional documents that you should be able to gather so that you can do a thorough, comprehensive review. Either you're doing it by yourself, or either you're sitting down with the CPA or your tax professional that's actually doing your tax return. And so you want to start planning at least 6 months, if not sooner, before the end of the year. So you want to start your planning around mid-year, around June. Some folks actually start their planning after they've completed their tax return for the previous year. So, for example, once they've filed their 2023 tax return, then they actually go ahead and start planning for 2024. And so it's never too early to start planning. It just depends on what works best for you. And so you want to start planning as soon as possible. So let me go ahead and go into the second question that we received. And this question is asking, why is it important to keep accurate records of my income and expenses throughout the year for tax purposes? And so this individual that's actually asking this question, they're asking the question saying, why should they keep records? And I want to tell you this, records are extremely important. Records are important for your sake, but also in the event that you get audited. Records are also important for your tax professional, your CPA, or your tax attorney, or whomever is going to be filing your tax return. So you want to make sure that you provide them with documents, with records, so that you can actually ensure what you're reporting or what you're saying is actually the reality, and you're able to provide that in documentation. You see, when it comes to tax filing, it's very important that we don't put things in the filing that are verbally discussed, but we put things into the tax filing that we're able to actually document based on actual records. So it's very important. I want to make sure that you all understand that. So go ahead. I want to go ahead and give you a chance to jump in there. Go ahead.
Oh no, I was researching before we talk about this subject, and it was saying that IRS offers a simplified version. So if you don't want to fill out the 8829, there's a simpler version. You're aware of that, and what does that entail, Brieon?
Yeah. So there's a simplified method that the IRS allows you to actually do instead of taking all of the actual expenses. There's a
Mm-hmm.
simplified method they'll allow you to do it as an overall calculation for your
Mm-hmm.
home office expenses based on the square footage that you're using for the business. I don't have the actual calculation, but I
Mm-hmm.
will pull that calculation up and be able to share it. And so that calculation is very similar to other calculations like the standard deduction that the IRS does. And so for the home office, you can either take the simplified method or you can take the actual expenses. Now, I'll tell you this, always check both methods. Always check the
Mm-hmm.
simplified method and check the actual expenses so that you can maximize which method that you're actually utilizing. So you don't want to take the simplified method if you have more actual expenses, because quite naturally, your home, you're going to have those utilities. You're going to have a portion of that insurance. You're going to have a portion of those repairs and maintenance. You're also going to have a portion of the internet. You're also going to have a portion of the phone and other things. So you want to make sure that you keep good records and you're able to go through your list of itemizing items so that you can see which method is actually more advantageous. And I appreciate that because I was intending to cover that. So that's a good
Mhm.
catch. Glad you caught that.
All good, man. I'm here for you, brother.
All right. I know there's a number of other questions, so I'm just going to continue with the questions that we've received and at least get through those. And then we may actually have some new questions that are popping up. So there's a question that talks about, can making charitable donations affect my tax situation? And if so, how? So,
Mm,
making charitable donations, this is actually one that's a really good question, and it goes under the radar a lot. So, making charitable donations is a huge, huge tax deduction,
mm,
and you can deduct, get this, up to 50% of your adjusted gross income based on charitable donations. So, for example, if your adjusted gross income is $25,000 after deductions and credits, you're able to deduct an additional up to an additional 12,500 alone just from charitable contributions. And so I want to touch on this because charitable contributions, I want you all to understand this could be to your favorite charity. This could be to your approved nonprofit or non-governmental organization that's set up and has IRS status, 501c3 status. I know a number of individuals also give to their faith-based organizations as well. And so there are a number of things that falls under charitable donations. Those are just some of the key ones I just mentioned. So making sure that you don't lose that 50%, up to
mm,
50% deduction on your AGI, which is your adjusted gross income for charitable donations. So they can only affect you in a positive manner when it
mm.
comes to the charitable donations.
Wow, that's amazing. Now, Brieon, say, okay, now we're speaking a little bit of Spanish and maybe a little bit of Arabic when it comes to how extensive you are in mind of taxes. When you say on the form of like a beginner person, how do they approach? And do you recommend 8829 just from the first get go? And when is that person able to evaluate their own expenses and say, you know what, it's time for me to go to the 8829? And you know what I'm saying? Is that did that question come off right?
Yeah, no, I got you.
Yeah.
So, so I'll say this. I recommend anyone who's a business owner because as a business owner, you're able to take advantage of this. And
Mhm.
so this does not apply to non-business owners. And so
Mhm.
as a business owner, you know, there's so many different forms, there's so many different deductions. I always recommend that when you start your business, you at least make the decision to invest in a reputable CPA or a reputable tax attorney. And this is someone who knows more about taxes than you do because you're just learning. As you said, you're just a beginner. And most CPAs and most tax attorneys, they do what's called tax planning, which is what we talked a little bit about earlier. And so with tax planning, then a number of these forms are always going to come up. A number of these discussions about how to lower your tax liability typically comes up. And then also when you're doing your tax preparation, I always recommend don't rely solely on your CPA. Don't rely solely on your tax preparation expert. Don't rely solely on your tax attorney. Go to the IRS website, start researching forms, start asking questions in that search box that I showed you all earlier so that you can start self-educating and you can start building up yourself. You can start reducing your learning curve as soon as possible because I can tell you from personal experience, I've worked with about 7 or 8 CPAs over the last nearly 2 decades. And, all CPAs are not created equally. All tax professionals, whether they are tax attorneys, tax preparation experts, what have you, all of them are not created equally. So you want to make sure you have enough foundational knowledge, enough foundational information to be able to start, managing properly the work that they're doing for you. But it's going to take time. You have to be intentional about learning this. It's not going to come to your doorstep. You have to be intentional in utilizing the IRS's website is a very, very good starting point. And last but not least, never, never, never sign your tax return without fully reviewing it and without fully understanding it. And the tax professional who prepared it for you, their duty is to ensure that you understand it. And your duty is to ensure that you understand it before you sign it.
Interesting. Interesting.
Yep. So next one we'll jump into, it talks about what are the consequences. And this is a this is a really good question. What are the consequences of not filing my taxes on time, and how can I avoid any penalties? So it's kind of like you won't file on time, but you want to avoid penalties.
Right.
So I'll tell you, because that's an odd question, but that's actually some truth to that question. So you cannot file on time and avoid penalties only if you don't owe any taxes. So if you're due a refund and you don't owe any taxes, then you're actually able to not file on time. Now, I recommend that if you're not going to file by the deadline of April 15th, then you file an extension. You don't just not file on time, you file an extension. So that extension will give you an additional 6 months until the middle of October. So once you reach the middle of October, then you should have filed your tax return by that time. Now, if you have not yet filed your return, make sure you don't owe any taxes, because if you do, then you will not be able to avoid those penalties and also interest on that. So making sure you keep yourself out of hot water with the IRS. So there's just a couple of more questions we're going to jump into. And so we'll keep it going. We'll keep it rolling. What's the difference between filing taxes as an employee versus being self-employed, and how does it affect my tax return? Another really good question. The difference between filing your taxes as an employee versus being self-employed. And so I always like to break this down into 2 categories. Being self-employed, being an entrepreneur, being an investor, being a professional contractor, whatever it is you may be. There's a number of things versus W-2 income. It's always 100 times out of 100 times going to be more beneficial for you to be filing as self-employed or filing as an entrepreneur. Because I want to tell you something, the tax code, the US tax code was written for business owners. It was written to spur job creation, job growth. And so there's so many advantages, there's so many deductions, there's so many benefits that you as a business owner, you as a self-employed, you as a contractor, that you're eligible for, that otherwise as a W-2 employee, you would not be eligible for. So we want to make sure we understand there's a distinct difference, and the more benefits are going to be leaning toward the side of the entrepreneur, because that's who the tax code was written for.
Hey, Brieon, real quick question. I gotta ask this question for overseas people. And as far as filing your taxes, because I ran into a big problem. I didn't file my taxes 2 years in a row because I knew that I was already exempt. All right. Um, but I did not file those taxes, and I caught a big penalty for 2 years. And they took out around six. It took around about $6,000 on my taxes.
Mhm.
So my question for you is, and it's just an open-ended question because I know people have. I've been asked this question before. Uh, even though we're getting exempt from it, we should still file our taxes, correct?
Absolutely,
Yeah.
absolutely. And so I want to go into a more detailed explanation about it. And so, when you're working overseas, you have a tremendous advantage. And I just want to say it very clear.
Hey.
You have a tremendous advantage. And I don't want to understate that advantage. So when we look at working overseas, you're going to fall under two categories. You're going to fall under either what's called a physical presence test, or
Mhm.
either you're going to fall under what's called a bona fide residence.
Resident. Brother.
And so, either one of those statuses, you're going to be eligible for the maximum benefits and deductions and exclusions because you're working outside of the country. And so,
Right.
really quick, you have to be able to meet a physical presence test of 330 days where you remain outside of the United States. And also for a bona fide resident, you have to show where you've established residency in that country that you're living and working in. Whether you're working for a company or whether you're self-employed, you have to be able to show. And so there's a number of ways you can show bona fide residency and intent to continue that status in that country. That can be from, things like a residency identification card showing that you're an actual resident, that that country has recognized you as a resident of their country. Also, other official documents like a driver's license that you have in that country, and other official paperwork that shows you're there for a reason. You have, the eligible visas. You have, been sponsored by a company or an employer, and a number of other things. It could be a work contract and a number of other legal documents. So we got that out of the way. You qualify either physical presence or either you qualify under bona fide resident. Now, get this: in 2023, everyone who worked outside the United States, the government gave them an opportunity to exclude $120,000 of their income. So everyone that made $120,000 or less, they don't owe any taxes on that income. Now, here's the kicker: you still have to file. You still have to file to be able to show the government, these are my documents. This is what I actually brought in. This is the applicable exclusion for me. And so I'm taking advantage of this exclusion. That's what filing does. It communicates to the IRS. I'm taking advantage of this through these specific forms that you've asked me to fill out, through this additional documentation you've asked me to attach, through this physical presence test, or either through the bona fide residency. You've asked me to do that. I provided that my income was X. And so I'm able to take advantage of this $120,000 exclusion. Now, if you're making more than $120,000, then that's when you start to be taxed on that income above $120,000. So very important to make sure that you file. There's also a special there's a special, or I would say an additional time frame that you're allotted to be able to file once you're working out of the country as well. I don't have that in front of me right now, but I do know it goes beyond. There's an extension beyond the normal extended time when you're working out of the country. But I want to make sure everybody understands that. But filing is going to be the most important part of all of this to make sure that you do receive those exclusions and deductions that you're eligible for just from working out of the country. That's not even applicable to those who are also working within the U.S. Very good question.
Hey, Brieon, just on that real quickly, real briefly, brother. Now that you can move on, the penalty, if you're penalized years for those years, can you go back and refile and get uh, can you get your money back from the money that you penalized those years?
So typically, when the IRS assess penalty and they assess interest, um, that penalty and interest is usually assessed on payment. Now, there are some rare cases that they do assess that on non-filing, but I would tell you 95% of the time, they're assessing that penalty and interest against taxes that were owed or taxes that were due to be paid. And so you won't be able to get that penalty or interest back on the taxes that were due. Now, I want to say this very clearly. If you did not owe taxes, then you are eligible to have, your CPA or current tax professional to go back and look at your last 3 years of tax filings to see if if those penalties and interest were taken, uh, in error. Because I do want to say this, and I want people to understand this: the IRS has human beings like me and you working behind the computer screens, and so there are, times where they may make a mistake. It's not often, but there are times where a mistake can be made, and mistakes have been made. And so, once those mistakes are made, then typically CPAs, tax attorneys, those tax professionals are able to work it out, if that is the case. But if it's not the case and it's due based on taxes owed, then, typically you may count that as a loss because there's nothing that can be done for that.
Appreciate
All
that, man.
right. And so that actually flows very well into the last question that we received that talked about, this individual said, in simple terms, what does it mean to be audited by the IRS, and how can I prepare for it? Um, I will tell you this: you don't want to be audited by the IRS. This means that something within your return drew a significant red flag. It caught their attention. It came up on their radar. And so you never want to be on that side of the situation where you're drawing red flags with the IRS. And so, when you're audited, that means that there's some inaccuracy or there's a concern that there may be some sort of falsifying, or there's deductions or things that are being taken that you may not be eligible for. So there's a number of reasons why you could pop up for an audit. And so preparing for an audit, the best way you can do that is to make sure that you keep good records, to make sure that you keep good documentation. And also, this is how you avoid an audit. Like I talked about earlier in the beginning when we came on, good record keeping, provide that to your CPA. Make sure they match that up on your return. Make sure you review your return. All of these steps that I'm providing to you are checks and balances on the process to make sure that once your return is filed, then your return does not trigger an audit. So good record keeping is the most important thing. And that's what I say you can do to prepare and also avoid an audit by the IRS. So that wraps up the questions that we received. I don't see any additional questions coming in here on my screen. Just wanted to give you an opportunity if you had any additional insights or any questions. Cory, glad to have you a part of the show, and I want to extend an opportunity to you to come back whenever your schedule allows, whenever you feel the need.
Of
You
course.
you always have a seat here at Tax Talk on the platform, and you always bring really really good advice and things like that. And also for those of you who are just tuning in, didn't catch us earlier, as I said, Cory and I, we also do another show on Wednesdays that's called Wealth Wednesdays, and this is over on the Tag platform. And Cory is the host of Wealth Wednesdays. He
Mhm.
was kind enough to share his platform with me and bring me on, and so we wanted to make sure we extended the invitation. And so I'm grateful to have you here on the platform, and just want to allow you to have any parting words or final comments.
First of all, this is great again to be here and honored to be in the presence of greatness as in Brieon, man. We're friends outside of all of this social media. I met him in a very peculiar circumstances, but it was very, very, very warranted. I knew God had something to do with that meeting. Man, thank you for having me. And again, y'all, if y'all can get on the Tag platform. We on there. I'm actually on the Tag platform as Vibes as my alias name, which I go by when I'm on there. But tap in with us in the Money Talks. It's gonna be great. Actually, the Money Talks subject is based on what we talked about here, and it's talking about the advantages and disadvantages of living overseas and America, and that's what we're going to talk about on Money Talks on Wednesday coming this week. So I want to plug that into Brieon so he can go ahead and get that get that plugged in real quick. But man, I'm constantly like with Brieon. I'm humbly to say I'm a student, brother. Like I know some things, but I always when I come here and especially when I come on this platform here, I am a student and I'm filling myself with more information. But I mean, I do have extensive experience and information when it comes to this. But man, your mind is incredible. It's incredible, man. You've studied this for many years, and I can tell by by experiencing the scenarios that you're just phenomenal, brother. I just want to give you flowers, man, while I'm here. Thank you again for having your platform, for being on your platform, and thank you to Favor as well, man. I haven't get a chance to speak to Favor, but I just wanted to say hello to him and thank you guys, both of you, for doing this, man, and having me on. And I'm going to come back, and we're definitely going to come back here.
So we're definitely looking forward to having you back. Those of you, you all know we're here every single Saturday, 8 a.m. Eastern Standard Time. We're here on the platform. We want to make sure you come back, you tune in, you continue to bring us your questions, you continue to bring us your comments, you continue to share with us whatever it is, concerning taxes that you need to know, because we're here. This platform exists to serve you. And so we want to make sure that we're getting you the information to demystify, to uncover potential tax savings, potential tax benefits for you that can help you improve your financial situation, both from a personal standpoint and also from the standpoint of a business. So, thank you all for tuning in. We'll see you all again, same time, same place, next Saturday morning. And you all enjoy the rest of your day and be blessed.
Be blessed, y'all. Thank y'all for coming.